Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking back in on the biotech sector, so we had XBI, a nice higher low and higher high on Friday, normal healthy consolidation, rejecting from the upper Bollinger Band daily resistance. But look at that volume, that's exactly what the bulls want to see. Decreasing bear volume on a pullback after a 2-day very strong bull break. So the bulls are going to look to continue to hold higher lows and higher highs, looking at key support of 64.56, and we're looking to form a higher low relative to that level. In terms of resistance, the upper Bollinger Band need to keep updating that level as the bulls have stalled out there the past 2 days. 67.38, and then the next level I'm looking at is 67.77 for resistance levels on XBI. So after the bull break, we can see here we had a rejection from the 100 week, and we pulled back, we closed above it, and then we back tested it this week and held it. So previous resistance, affirming that it's some decent support, and now we're looking up to try and continue breaking these lower highs with a major level being 68.18 and then 69.19. So if you look at the daily time frame, you can pick out little smaller increments of resistance levels, but if you're looking on the weekly time frame, 68.14 is the next major level that the bulls want to break. So the biotech bulls are still strong. The S&P 500 is at all-time highs. Certainly only helps the bulls on the biotech sector as they have been seeing some nice momentum following the ignition was when Trump started talking about FDA approval process and everything else that he mentioned that led to this big 4% plus day back on January 31st. So IBB, as we've been pointing out, it's been a bit of a laggard. It still has not broken the lower high pattern. So 287.17 is the level to break, and we have a bearish reversal candlestick on the daily time frame. Similar to XBI, it's low volume, it's healthy after a 2 bull day move. Support needs to hold 278.31, trying to form a higher low compared to that level, but we have yet to break that lower high pattern, so a little bit more skeptical of this pullback if the bulls cannot break 287.17. And we can see on the weekly time frame just how tight we're getting. Higher lows, lower highs, and no clear break. Obviously, the momentum in the market and in XBI would favor a bull break, but it's just a weaker name, and if I'm playing the biotechs and I'm playing bullish, I want to be playing XBI or LABU and LABD. And I'm not going to look at those charts, LABU and LABD, because number one, LABD just keeps hitting new all-time lows. It's a very clear bear. I would be shorting it if anything. And LABU, the chart is the exact same looking as XBI, and I wouldn't be using moving averages on those leveraged ETFs. I would be using the moving averages on these underlying sector spiders that the leveraged ETFs are trading off of. So moving averages on leveraged ETFs, not really as meaningful because the price is going to do whatever this underlying is going to be doing. So AGN, individual names now. AGN has an inside candlestick on the daily time frame showing a tightening range. And after a big time bull breakout, we need to be looking out for some short-term healthy consolidation. If we get a break of 243.50, we will look to pull back a little bit. First support after that would be 241.53. So you could be looking to make a bearish entry, anticipating short-term healthy consolidation on a break of this inside candlestick Monday, 243.50. If the bulls break 247.19, we're looking up at 249.64, the highest price we've seen on this move. So big time follow through. We had that bull flag, continuation. Bulls are trying to break the lower high pattern on the weekly, but in order to do that, we have to get over 261.27. So we're still over $12 shy of that mark, and the bears are still very much in control of the weekly lower high pattern as long as that stays the fact. So 246.57, we did reject from the weekly upper Bollinger Band resistance. So that's another factor that has us looking for some short-term consolidation because that upper Bollinger Band on the weekly is going to be in play again next week as it's not going to ascend too rapidly from where it currently stands. CLVS has been one of the lead biotech bulls we're watching. And we have a lower high now. We had our high at 67.16. We bounced off the middle Bollinger Band support. Our lower high now at 66.53. And the bulls are looking to test that middle Bollinger Band support again. It's going to be in the low $61 range on Monday. We closed near the low of the day today, or I should say on Friday. So if we see further downside, that middle Bollinger Band is going to be tested, and the bulls must hold 58.61 to keep this tightening pattern with our lower highs and higher lows reaching a bit of an equilibrium. The weekly time frame is a bit of a bearish reversal candlestick. We're losing the upper Bollinger Band support after holding it for a month, but it also could be a nice bull flag of consolidation. So we need to keep an eye on this consolidation, because on the weekly time frame, after such a big 5-week bull move, and it's really been a multiple month bull move, we could pull back here. We could pull all the way back to the mid 55s and still be forming a bull flag pattern on the weekly time frame. Whenever a bull flag pattern is forming, what we're watching for is volume to make sure it's not increasing, and just trying to gauge by that volume and the price action as to how long the bear flag or the bull flag of consolidation is going to be. It could last, 1.5 weeks. It could last 4 weeks. So that is a bit of a trick, but we watch the exponential moving average supports with regard to flags, and as long as the exponential supports on the weekly hold, it does look like a nice strong bull flag pattern, so we'll be keeping an eye on those as well. VRX, nice follow through, higher lows and higher highs on Friday. A little bit of an upper wick showing profit taking by the end of the day, but this is the close on the weekly chart that I was looking for. Above exponential resistance for the first time in many months, and now the bulls are looking up at some resistance levels. 1524 and 1567 are the next two levels that we're looking for. If we do see any kind of weakness, as long as the bulls form a higher low of 1316, this weak bounce attempt, at this point it's a weak bounce attempt, the bulls need to see a move up towards $16 and $17 for it to be more than that. I am keeping an eye out for a trend change here. That's why I am interested in VRX at these levels. The biotech sector has some momentum to the upside. The market is obviously really strong. And if the bulls can break 1755, we then have our higher low and higher high turning around this very brutal weekly downtrend we've been in for a very long time. The RSI has been oversold for a long time. We're just coming off of oversold for the first time in a long time. And we're watching for the 4-period exponential moving average support to cross the 8-period for a bull TCG cross. We haven't gotten one of those crosses in many months as well. So keeping an eye on VRX, giving the signs we want on the daily time frame. Now we're getting that first sign on the weekly time frame. We just need to be skeptical, as the bears have been in full control of this chart long term. But as of right now, I am liking the way that this shift is occurring on the weekly time frame. So that's what we're looking at on the biotech sector heading into next week and some of these individual names. I appreciate you watching and hope you have a great weekend.